What is the one question that we all want answer? How do you save more money? Because if you end up saving more money, you get more money to spend, you get more money to invest. That is what we'll be looking at during this Instagram live space. How do you save more money? What are the habits that you need to have to sustain this habit? As well as how do you start investing with the amount of money that you save? Join us on this Instagram live where we talk a lot more on this topic.
So, what is your view on the mutual fund business? Do you think as a new age business, it's one of the prominent businesses to look at for a 5 or 10 year view, or you share the same pessimism which a lot of participants in the financial services industry have?
I don't know why you would be pessimistic about the mutual fund.
But a lot of people are, you know it very well. No. Those who have ESOPs are more pessimistic than those who are outsiders. I don't know why.
No, I can understand the growth rate may not be the same. Let's take a big AMC like HDFC. Over the next, say, 5-6 years, I'm sure that AUM will go up 5 times. Their profits may go up 3 times. Their margins will go down, which is true for everybody in the financial service industry. Margins have gone down, but total profits have gone up. Let's face it, the margins have gone down, but the size of the market.
But also there is a proxy of valuation, right? Suppose you are able to catch these companies when the valuation of the market is low, then you have the upside of valuation also getting captured into the business. There is no business which does this double booster, right? You said you have asset gathering as well as valuation, both contributing to income.
I think the valuation part may be over because the pricing power is not there in this industry.
No, I am not talking about their pricing power.
No, I'm saying
I am talking about the valuation of Indian corporates in which they are investing. Let us say that you are at wherever you are in the market today, 19,000 of Nifty. Let's say everything comes down by between 10% on the Nifty and 30% on the other indices, 20-30%. AMCs will also come down. They will get derated. Maybe you will get HDFC at 20 times or 18 times next year earnings. Now from there, let's say the market goes up to something like a 50,000 or 60,000 over a period of 6-7 years or 8 years, whatever be the time frame. Now suppose the market is factored in only 40,000 and you get a 60,000, right? And you get it sooner. Somewhere the industry will also have gathered huge capital, the valuation also higher than what they anticipated. Obviously the earnings will go up because even if you reduce the income and the TER a little bit, this is a bigger driver, right? So you can actually make a lot of money. So at that point market is not going to be pessimistic. No, at that point the market will factor in the peak numbers.
So I think you should be buying this during a bad market, right? For any business, the AMC will fall faster than the industry, than the index. It will fall.
Falls, it is certain to fall.
So it's a great time to be buying because I think these shares will become good dividend yield shares because the AMCs will not need the money and they'll start doing good payouts. So it will be a good share to hold in your portfolio more as a compounder than a company which is going to double or triple. That's not going to happen.
No, but it could happen. I'll tell you why. If you look at IEX, and I caution that this is not a recommendation or anything, I'm just sharing what happened in my own personal experience in the past, a few years ago. The stock price fell to around 150, 160 of the original share, not the one that is post bonus or whatever. So we got all the way from 160 to around 140 or so, something like that, 135, 140. From there it went up to 675, 700, we sold. This massive move, nearly close to 4 times, happened in less than about 18 months, not even that much shorter. Then it went even higher, another 10% after we sold, because we felt too much had happened. See, the market reprices these kind of new age business very fast because they are basically efficient businesses, they don't need capital, and when they grow very fast. True. Like the Chinese bamboo, and the valuation grows even better than the Chinese bamboo. True. So my question to you is, why can't it happen to AMCs also someday in the future?
It can happen. So if you want to hold some stock permanently in your portfolio, do that and trade. I mean, look at HDFC Bank. Is it going to be a multi-bagger from now? Answer is no. It's well researched, 150 analysts tracking it, but it will be a compounder, right? When the banking penetration improves, banking penetration will also mean mutual fund penetration. right? If let's say HDFC Bank opens 500 branches over the next say 2 years, 500 branches will have 2,500 relationship managers selling mutual funds and insurance. So the distribution for mutual funds and insurance will happen through banks. So if your bank grows, they will grow the ancillary businesses. So they will open new demat accounts, they will open new trading accounts. So HDFC Securities will benefit, ICICI Securities will benefit, Kotak Securities will benefit. So the whole ancillary thing grows. The core is the banking. Along with banking, all these things will grow.
But the key thing in our estimation is you have to understand which are the companies where you invest just to beat inflation marginally. I would rate a bank in that category. Whereas a new age business should be some opportunity for us to beat inflation significantly. Otherwise, we shouldn't play it at all. That is my sense.
I don't know, because if an HDFC bank decides, the fact that the government of India has created such a fine backbone, if HDFC Bank were to create a fabulous system by which they can open bank accounts in 20 minutes and things like that, there is a new age business in the HDFC Bank business also, right? So similarly, if a Zomato were to get an NBFC license and tell you, don't pay every month, okay, pay at the end of the month, we will accumulate it for you. Again, convenience, right? So I think Ola is doing it, allowing you to accumulate, end of the month they pay you. After that, you have a credit rating, they start giving you something else. So you don't know, most important thing is you don't understand what all leveraging they will do.
You are saying the optionalities are still being discovered.
Still being discovered, they themselves don't know. How do you know that tomorrow Indigo will not sell more food than many of today's restaurant chains?
Potentially they could. I am of the view that PVR is today more a QSR with a movie than the other way around.
True. So you don't know what is the main Indigo. If Indigo starts selling worth say 1,000 crores of food, that's not small. You can't ignore that. What if they start doing that catering in the lounges? Right, so suddenly they double their, or you could get a lounge access. Because you're getting a lounge access in the aircraft, you will get free food. You don't know what all could be packaged with what. So there could be a card, which could be a bank card with an airline, which will allow you access, which will allow you so many things. We don't know. We are limited by our own imagination. So let us see the growth of HDFC AMC and ICICI AMC. It was bankrolled by a big company called ICICI Bank and HDFC Limited. Therefore, we did not see the pain, we did not feel the pain. Remember, both the AMCs are 20-year-old companies. So in year 1 or say 2001, what was the balance sheet of HDFC AMC? We don't know. We were not privy to it, or we saw it and it made 200 crore loss or 300 crore loss. It did not bother us because HDFC was paying us dividend. ICICI Bank and HDFC Bank or HDFC Limited and ICICI Bank were the venture capitalists who were floating the insurance company and the AMC. 20 years they funded it, so it did not come out in the open. Now you look at Zomato and say they're making so much losses. Those losses were hidden. So we didn't see. So we think, oh, but this AMC business is 20 years old. Indigo is today 20 years old. In 20 years back, did you have the guts? Did you have the vision to see such a huge growth in the airline traffic?
No, we didn't.
We didn't. So tomorrow, how Zomato will grow? What if Zomato says, Shyam, come to this pin code, I will buy 1000 kg of biryani from you. Whatever else you want to do, you do. You look at it, you do the calculation, and you have a piece of land or you have a place where nobody will come.
No, they are clearly creating markets for some brands which are closely tied up with them or associated with them. So a lot of this cross-selling is happening, promotion is happening.
Also look at how expensive real estate is in places like say Bandra. Or you take certain parts of Mumbai. I said Bandra because we were talking about it. All those places, so it's a play on real estate also.
They could create a chain of cloud kitchens which would actually upset the hospitality industry itself.
Yeah, so we don't know hospitals. You could actually today be sitting in a 5-star hotel and get food from some other place. You will just have to come down to pick it up.
Correct.
They will not serve it in your room if he comes with a Zomato uniform. So you'll have to come down to pick it up. So you are in Nariman Point, nicely sitting in a 5-star hotel. You want to eat masala dosa from Matunga.
You'll get it.
You will get it. We don't know what are the possibilities which are there. We did not know 5 years back that we will have a 15,000 rupee SIP book. But today that 15,000 is happening. At the same rate at which it is going, over 4 years it will be 30,000 book. That's not small. We are all seen. We have all luckily be sitting there. Some of the gold dust has fallen on us also. To think it won't happen in other industries is wrong. Right?
So what we need for new age business is an open mind, a lot of alacrity, cheerful readiness to look at developments and to do the math as you see optionalities emerge.
And talking to 23-year-olds and seeing how they are spending their money and not saying, oh no, they should be saving more. No, they don't believe. I mean, look at the 23-year-old whose father is going to anyway leave 10-12 crores. It can't
See, all this preaching, I don't think we can take our...
No, those kids can't be convinced that they should save money. They are not interested in saving. They will spend.
Memory loss for most of us, because you see, my grandparents would not eat out. Food was always made at home. But that's not the case with our generation, and the next one probably will only eat out. So you come very far from that.
I mean, maybe your parents thought, oh my God, he's spending so much money. Why is he going by auto rickshaw and not by bus? But today a kid assumes that he's going to travel by car in his first job. He's not saying I can't afford the car because his package is 17 lakhs and the car is 3-4 lakhs. He buys it. When we were starting, when I started my salary, started my job, my maximum salary would have been 25,000, 30,000 rupees. A car costs much more than that. Right, so I would not have thought of buying a car because car costs 1 lakh, which was 3 years CTC. For my daughter, it's going to be 3 months CTC.
Correct.
She's going to think differently. Correct. And she does not have to provide for anything else. Everything else is provided. How they spend is going to be different. Have the brain power to employ 24-year-olds. They can tell you how they behave. We don't know how they will behave. So new businesses are meant for them, not for us.
So on that note, let's close this conversation with the hope that more such businesses will open up. More such opportunities will give us insights into how new age businesses evolve, and maybe a few of these opportunities may be very interesting to bet for the next 5 years. Thank you for watching this video.